The new year has officially come, and so today I'll share with you 3 of the best stocks to buy right now in January 2024. In this video, you'll discover 3 companies that are currently quite undervalued in my opinion and that are offering great potential of upside for the rest of the year. So without further ado, let's get to it right now. Starting out with one of the largest tech companies in the world, which is the American giant Apple with the ticker AAPL. Apple is worldwide recognized as one of the best producers of cell phones and computers with a current market cap that is standing at over $2.5 trillion. But recently, it has seen some massive decrease in their total valuation. Indeed, the beginning of 2024 has been quite rough for Apple, where it has been down by over 3% since the beginning of 2024 and where it has been down by over 5% over the last month. And so this decrease has been linked to a loss of many $100 billion in their market capitalization. But so what has caused this downtrend for a company that is known to produce some of the best products in the electronic field? One of the first things that have impacted the value of Apple lately is the downgrade of the target price prediction of this company by the Barclays firm that has considered this stock as being underweight. And another factor that has been impacting the value of Apple lately is that over the last 4 quarters, we've seen that the Apple total revenues have been dropping. Add to this, the company has hinted that during the holiday seasons, they were predicting to have also less sales compared to the previous years. Plus, on its side, the famous iPhone that accounts for over half of the total revenue of this business is facing higher competition in China with the coming of an old competitor under the name of Huawei. Nevertheless, even if we've seen that all of these events have had an immediate impact on the valuation of Apple in the short term, well, there are still many bright spots for the investors to invest in this type of company. First, when you decide to invest in a company like Apple, you decide to invest in a company that is one of the strongest financially, that is still able to generate over $300 billion of revenue every single year. Plus, Apple is one of the few companies that has successfully been able to adapt to the new generations and to all the new technology that has came out over the last couple of decades. And one of their best tools is notably to be able to come out every single year with new products such as new iPhones. For example, you have the new iPhone 16 that should come out on the September 2024. And another important release that will come in 2024 is the release of the Vision Pro mixed reality headset, which could help them to develop another side of their business model that was still unknown to them, which is the metaverse. In fact, Apple has yet to show its cards in the high-stake game of the interactive AI. According to Bloomberg's Mark Gurman, Apple has been developing its own language model and has been internally testing an Apple GPT chatbot based on it for months, where it could become a direct competitor to the popular ChatGPT. In any ways, when you see the impact of products such as the Mac and the iPhone, you can see that Apple is a company that is still there to stay for the future. And an important fact to understand the importance of this business is that it is one of the companies that has the largest assets allocation of all the important ETFs funds, notably for big fund companies such as BlackRock and Vanguard, and by itself it represents over 9% of the total Nasdaq. Jumping out to the second company on my list, which is the American multinational Boeing with the ticker BA. Lately, this aircraft company has been going into some tumultuous times where it has lost over 5% of its total valuation since the beginning of the year, and the company's valuation is still quite lower compared to the peak of its value that it has reached in 2019 before the crisis. In fact, over the last couple of years, we've seen that Boeing has took its investors through some rough ride. This stock was first beaten in 2019 after the grounding of their famous 737 MAX. This grounding came after many safety concerns and after the pandemic has hit all of the aircraft companies because all of the airline companies were shut down, which led to many cutbacks in the new airplanes orders. But since the end of the pandemic, we've still been able that a company like Boeing has restarted to see some great positive momentum before to see some important decrease lately. In fact, the important news that have been impacting their value lately is the important incident of the 737 MAX. During this incident, we've seen that a chunk of a plane's fuselage blew out on an Alaska airline Airlines flight. And so this has raised many concerns for investors that have seen the stock drop by over 8% during that day. And so you can see that this $22 million airplane has been causing a lot of trouble to this company lately. However, the positive news for Boeing is that the worst is probably all behind them. Indeed, after the strong hit that they've seen and that they've been facing over the last 3 years because of the COVID, the company has recently announced that they were increasing their monthly productions of 737 from 31 jets to 38 jets per month, and so this represents an increase of many hundreds of millions of dollars per month. And so following these news, we've seen that the stock price has surged by over 7% during that day. Plus, in December, a 737 MAX has been delivered to China to the Chinese Southline Airlines for the first time. And so this represents some excellent news for Boeing because China is currently the world's largest aviation market. And so it would be very difficult for Boeing to recover without selling any planes there. Overall, even if Boeing still has a lot of debt to pay back over the next couple of years, with the end of the pandemic and with the project growth in their total operations, they should be easily able to tackle these liabilities. However, by investing in a company like that, investors should be aware that this turnover could take a long period of time. And finally, one of the most undervalued stocks that is still available on the stock market is the American giant PayPal with the ticker PYPL. Over the last couple of years, we've been used to see that PayPal was facing a lot of difficulties where the total valuation has been down by over 20% since 1 year, and where the stock has been down by over 30% during the last 5 years. During 2023, these poor results came out because of slow growth, some free cash flow that has been dropping, and some high uncertainty for the investors when it comes to the management team and their leadership, which was some quite negative news for all the investors that were looking to potentially invest in PayPal. However, an important news came at the end of 2023 where we've seen the coming of a new CEO to the board of PayPal. Indeed, Alex Chriss has been named to lead this company with his experience as the executive vice president of Intuit, a financial platform specialized for tax preparation. Shortly after his nomination, the CEO has emphasized his objective to focus on increasing the total profit margin of this business. Indeed, he has said that he will redirect the company towards more profitable growth by streamlining the business and tightening cost controls. This simply means to find what are the most profitable financial priorities and to align all of the resources toward these objectives. And eventually, in the next couple of quarters, it means that if the company isn't going in the right track, he will probably proceed to many layoffs to be able to become more profitable. Indeed, by looking at their more recent earnings report before the coming of this new CEO, we can see that despite a great quarterly increase of about 8% of their total revenue, we've also seen an important increase in their total net expenses, which has led to a massive decrease of about 23% in their total net income. It means that the new CEO has a lot of work with this company, but with its past success, we could potentially expect some great potential growth over the next couple of years. And so I'm looking forward to see what will be their next earnings report that will come out normally at the beginning of February 2024. However, what could convince me eventually to invest in a company like PayPal is that it is still the #1 online payment system in the entire world. Plus, this stock is currently sitting far from 80% of its all-time high with a current market cap of about $60 billion. And so if this company would be able to reach only a $100 billion market cap, which could be quite attainable in my opinion, this would result that if you decide to invest right now in this business, you would return close to 50% of total gains throughout that period. With the new CEO, I still have big expectations for this business that, in my opinion, could see the same comeback as Meta in 2023. So there you have it. Those are 3 great undervalued stocks, in my opinion, that are quite interesting to have on your watch list right now in January 2024. But on your side, if you're looking for another great ways to invest your money in the stock market in 2024, well, check out the video that's gonna be right over here, and I will see you soon. Peace!